to discuss those US employment figures and the situation in the UK, I'm joined by Peter McGuire from XM. Thank you so much for joining us. Now, as we've heard, we saw very strong employment figures in the US in December.
Absolutely, Sue. Good morning. Happy Monday. Yes, 256,000. I think it hit everyone by surprise. There was no, I think the market really took a deep breath off it. And when you consider that, you know, that's been rolled across as far as 10-year, and the 30-year hit 5%. Briefly touched it, and you've had 4.76, 4.77 for the 10-year. US dollar is on a big hike up at 109.64. So the overall, I think, mood is one to consider. How many rate cuts do we get this year? Do we get one, or do we get a rate rise, or do we get none? And that's where the market's starting to, the rumours in the market. So yeah, it's going to be a fascinating first two quarters.
Now, if we can drill down into those figures, where were the jobs created, Peter?
Well, I think the 256,000, it was naturally over a Christmas period. So you've got short-term workers. You've also got government roles across the whole, the retail sector. I think the mood has been relatively strong, and I think that that's also a good sign. You've had unemployment go from 4.2 or 4.3 to down to about 4.1%, and that is, I think, over this, the winter period in the States, positive sentiment, and naturally how that rolls across to the overall economic, growth numbers coming into the first quarter.
Yes, and the US Consumer Price Index data out this week. What are you expecting?
Closer to 3% than 2%. That's the issue, and that's where the thoughts are. Is inflation under control or out of control? And it's going to be, I think, a natural a pivot point. And again, a week today, you've got President Trump coming into the chair. So how does that all roll with the introduction of tariffs and the general mood that could really, rattle the cage considerably?
Well, you mentioned the prospect of future rate cuts, but do you think they're off the table until at least mid-year?
Oh, definitely. I can't see that. You've got inflation closer to 3 than 2. You've got energy prices now at $80 a barrel. You've got very strong, the employment numbers in December were, 256,000. Some were saying you might only get 60 or 80,000. Consensus was about 150, 160. So it's well bid up. And then the next side, you've got a very strong bond market. You've got the US dollar index approaching that 110 handle, Sue, and all the currencies are being crushed under it. Euro, yen, Aussie dollar at 61.5, 5-year low nearly, and the pound at 1.22.
Now, as you said, Donald Trump coming in on the 20th of January. So is there a risk that his tariff plans will increase inflation?
How he structures it, I mean, he's got I've heard so many different combinations or storylines from the likes of Vivek and Elon Musk. They've got a close eye on government roles and how they're going to take a chainsaw to that. Reminds me of Al Dunlap, famous corporate raider from the 80s, chainsaw Al. So they may adopt a similar principle, and that was to really severely give the government headcount a cut. So there's the first part. How does that roll as far as bonds? And naturally, President Trump wants a booming economy. And what's the mantra and what's the mood moving forward? Are we at a inflection point as far as equities, or is there another leg up over the next month or two?
Let's turn to the UK. You think that the UK may be caught up in tariffs as well if President-elect Trump does go ahead with his plans?
Well, exactly. I mean, there was a lot of, going back a month or two before the Starmer/Elon Musk incident was released to the public, there was every chance that I thought the POMs may be sitting, fairly easily. But now the whole rhetoric's changed, and how that mood is going to be interpreted from traders and from President Trump himself and his administration. So if they were to introduce tariffs, I think it'd be a fairly hard call on the UK. They're really under some pressure, like Europe. They're all battling a very strong headwind, and you can roll China into that as well.
Now, UK bond yields have jumped to a multi-year high. Is this a Liz Truss moment?
It possibly is. I want to see how long, everyone's calling for Starmer's head. So it's going to be interesting whether he lasts over the winter and into I would say the spring period. So it's just a work in progress, how that's all going to materialise and whether we're going to see further softness as far as pound against a raging dollar and what impact that has naturally to bond yields. But the 10-year, it was only a month or so ago, and it was at 4.25, 4.3, that US 10-year. Now you're at 4.75, and everyone's saying is 5 the new handle in the short run, which would take up the UK as well.
Now, do you think there'll be another Bank of England rescue package for the UK?
Wow, that's a big one. They've got to deal themselves out in any way that they can. They've got to try and get some economic growth. I wouldn't be surprised, Sue, and I think that'll put further pressure on the pound, of course. So it's a wait and see. One thing for sure, this first quarter is going to be very dynamic, and I think volatility is going to be the name of the game. So if any trader out there, you've got to look at the volatility, and that in turn creates opportunity.
And what's going to happen to the pound? Is it likely to keep falling?
I wouldn't be surprised, maybe a 118, 119 handle. That's what many traders are looking at. They're the forums that I listen to and the people that I talk to, they're saying it's in a bit of a death spiral at the moment. US dollar is just on one-way traffic. It's just, being bid up. So the pound could come under further pressure, and euro approaching that parity. Aussie dollar maybe a 58, 59 handle, and the yen possibly going to 160, but we've got the chance that you could see a Bank of Japan rate hike on the 24th, Sue.